Treaty reinsurance is a fundamental concept in the reinsurance industry. It's an agreement between an insurer and a reinsurer where the reinsurer automatically covers a specific portfolio of risks.
Interesting. So instead of negotiating each individual policy, the reinsurer agrees to cover an entire portfolio?
Exactly. This makes the process more efficient for both the insurer and the reinsurer. The reinsurer accepts the group of policies based on the overall underwriting guidelines in the treaty.
That sounds efficient, but how does the reinsurer manage the risks when they're not assessing individual policies?
The reinsurer relies on the underwriting expertise and consistency of the primary insurer. Before a treaty is put in place, the reinsurer carefully assesses the insurer's underwriting processes, loss history, and portfolio performance.
So the primary insurer is responsible for ensuring that the policies they underwrite fit within the treaty's guidelines?
Exactly. The primary insurer has to adhere to the agreed terms. If they underwrite risks that fall outside those terms, they may not be covered by the treaty and would bear the full risk themselves.
What types of risks or policies are typically included in treaty reinsurance?
Treaty reinsurance is most commonly used for lines of business with a high volume of similar risks, such as property, auto, or casualty insurance. The standardized nature of these risks makes it efficient to bundle them under a treaty.
Are there any limitations to using treaty reinsurance?
Yes, while treaty reinsurance offers efficiency, it also comes with a degree of inflexibility. The reinsurer automatically covers all risks within the treaty, so they don't have the opportunity to assess each risk individually. Additionally, the treaty will only cover risks that fall within its predefined scope.
I see, so the insurer may need additional reinsurance coverage for unique or high-value risks.
Exactly. In those cases, the insurer may need to arrange additional reinsurance coverage, such as facultative reinsurance, for the specific risks that fall outside the treaty's scope.